All right, there we go. Good morning, good afternoon. Welcome, everybody. Welcome to our live weekly mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, everybody is having a good day so far. Good morning, Jay. Good morning, Drew. First in the chat, glad to have you guys here. Waiting for everybody else to slowly filter in. Once again, welcome everybody. This is our weekly mobile coaching stream where we talk about the most comprehensive trading app out there. That is the VectorVest Stock Advisory app. It has all your wants and needs covered in one simple, easy to understand app to make it easier, better, faster, and smarter than anywhere else out there to manage your portfolio and make the right decisions in the market. This isn't trading for charity. That's right. It is not trading for charity. But once again, welcome everybody. Hopefully everybody's doing well. Drew saying, what's worse, Fed rate hike or Disney in China? That's a tough choice there, Drew. So for everybody that's tuning in for the very first time, just to give you a little insight, what we typically do is we first start to take a look at what's going on in the market here today. Then we dive into our topic of discussion where we're going to be talking about how to find some of the safest stocks out in the market during these uncertain times that we have currently. And then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So with that, let's go ahead and get right into it here this morning. Also, if you guys are enjoying yourselves during these streams, as always, make sure to smash that like button, subscribe to the channel if you're not already subscribed, and turn on those notifications so that way you get updated on all the content we have coming out for you guys on a regular basis here. So, with all that being said, taking a look at the overall market. Right now, the Dow is down about 0.5%, Nasdaq's down about 0.7%, S&P 500 is down about 0.6%. Overall, VectorVest Composite down only about 0.2%. Just taking a quick look at some of those quick graphs that you can see there. All the major indices are moving higher off of their lows, starting to head back to potentially break even, but still have a lot of time in the market. So be careful out there. Let the color guard be our guide throughout these troublesome times. And that way we can, really get in the sense of, when is the right time to get in, when is not the right time to get in. And even though they're starting to rally right now, that could change by the end of the day. So we need to be patient and wait for those right opportunities. But so with that, with the major indices down in the red, we are one tick into the red here today. Therefore, the color guard is mildly bearish and VectorVest does not advocate buying any stocks at this time. As always, if you ever want a comprehensive update on a nightly basis of what's going on in the market today, what news you need to be aware of, and how to prepare yourself for the next trading day, make sure to tune in to the daily color guard report found right here on the homepage of the VectorVest Stock Advisory app. And then, as always, taking a look at the color guard here at the bottom, this is where that market timing gauge we just looked at gets its colors from, and it's really coming from that top row of lights in the color guard. So there's three key components that we use to track our market timing. The first is looking at the price of the VectorVest Composite. Now, the VectorVest Next average of about 9,200 stocks that we currently track in the US market. And this gives you a better representation on what's actually going on in the market because it's not just looking at small subsets of the market, such as the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 9,200 stocks overall. The second indicator is the RT or relative timing, which looks at the short-term price trend of the overall market, and it's cast on a scale of 0 to 2. So above 1 would indicate the short-term trend of the market is up, below 1 would indicate that the short-term trend of the market is down. As we can see, the RT currently sits at a reading of 0.82, indicating the short-term trend of the market still remains down. Then our third indicator is the BSR or buy to sell ratio, which gives you an idea on the overall health of the market. It's looking at the number of buy-rated stocks in a database and comparing it to the number of sell-rated stocks in a database. And if there's more buys than sells, then the buy-to-sell ratio would be above 1. And if there's more sells than buys, this buy-to-sell ratio would be below 1, as it is now. So at 0.28, that indicates overall market weakness currently in the market. Then the trends of these three indicators are comprised to come up with our MTI or our market timing indicator. Once again, cast on a scale of 0 to 2. And above 1 would indicate that the underlying trend in the market is up, and below 1 would indicate that the underlying trend in the market is down. Give me 1 second. Everything's coming through fine on mine. One moment here. Oh. All right. So everything is coming through fine, clear on my end. So it's nothing on my end that's having issues. So if you guys are having sound issues, try refreshing the page. That worked yesterday. Some people were complaining about having some sound issues. All they had to do is refresh the page and it worked fine. So if you're having sound issues, that is a localized thing. Unfortunately, it's out of my control. I haven't touched a thing on my audio, so it should be the same audio that we hear every time that we never have any issues with. So yeah, there you go. All right, so getting back into it now that we've covered that and I got the message out to everybody, looking at the trend column. Now, the trend shows two parts of the trend each and every day. The first part refers to what we like to call the primary wave, which shows the short-term or simply weekly trend of the market. Now, the short-term trend of the market is down because if we look at the price of the VectorVest composite and compare it to 5 trading days earlier, we can see that it is lower compared to 5 trading days ago. The second part of the trend is looking at the underlying trend or the MTI, and since the MTI is below that level of 1, the underlying trend of the market is also down. And then last but not least, we finish off with the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. And as we can see, we still remain in that confirmed down situation as of today. Chris, also, good morning. Hopefully you're doing well. Jim's asking, my data is different from yours. Is your data real time? So Jim, right at the very top of the app, you can see data delayed by 15 minutes. It is a streaming delay or data just delayed by that 15 minutes. So it is on intraday for the just the basic mobile subscription there. All right. Last but not least, scrolling down, taking a look at the advanced declines, we can see 34% of stocks are moving higher for the session, 53% of stocks are moving lower for the session, and 13% of stocks unchanged for the day. Now, when we look at the advanced declines, we typically want to see a 2-to-1 bias in any given direction. So if we're wanting to play the market to the downside, we need to look for twice as many stocks declining than advancing. And if we're looking to play the market to the upside, we want to see twice as many stocks advancing and declining. Right now, we don't have that in either way. So therefore, we're going to be sitting on our hands, being patient and waiting for the right opportunity to eventually emerge here. All right. So with that recaps what's going on in the market right now. Let's dive into our topic of discussion. So with the market the way it is, if we go and take a look at the VectorVest composite, this is over the last 3 months. Let's go to a 1 year. Make it a little bit bigger so everybody can see it. Right now, we have a 3-8 exponential moving average on price, so very short-term moving averages. Then at the bottom, we have the RT or relative timing, which once again is looking at that short-term price trend of the overall market. As we can see, no surprise here, over the course of the last 12 months, the market has been moving lower, and we've had a consistent, steady downtrend ever since that point. So with all the fear that's going on in the markets, and with the Fed stating yesterday that, there's more likelihood that we're going to see a bigger rate increase in the near future rather than a smaller rate increase in the near future, this is where people get nervous about what's to come in the market. So if that is you, if you're somebody who's worried about the current conditions, but want to add some safety or want to add some stocks to your portfolio, try to take advantage of some of these or some of the sell-offs that we've seen here over the course of the last 12 months, well, VectorVest has you covered. So if we get out of here, go into the screener tool, and we'll look at the featured screens. And then at the very top, safest stocks with buy ratings. That's what we're going to be focused on here today. If you want to know what it's about, it says it right there. It finds stocks with the highest safety rating that are also rated to buy. These stocks tend to perform well over long periods of time. So these are good to add to your core holdings. That's what this list really is for. Yeah, that's a feature of Facebook, Jim. So Unfortunately, I have no control over that. Maybe Meta can help you out with that. All right, so let's go ahead and dive into this list, see what stocks really show up here. Now, most people will probably be familiar with a lot of these names. These are more common names that you're probably familiar with, you see talked about a lot, and that's because these stocks have consistent fundamentals. Now, the reason why this list is so important, or the way this list really gets its power, is by utilizing that indicator RS, or relative safety. Now, if you recall, as we've talked about previously, relative safety is cast on a scale of 0 to 2, but it's looking at the amount of risk involved with that stock compared to the average stock out there. So if the RS is above 1, that tells us or indicates that there is less risk associated with that stock compared to the average stock out there. And if it's below 1, that tells us that stock is riskier. Now, VRTX comes up with the highest RS rating that still has a buy right now. Looking at that quick chart, you can see a nice steady rise from bottom left to upper right. Whenever getting into a stock or whenever wanting to look at a stock, you always start off, before you take a look at the graph, always start off with the 4 indicators at the bottom to make sure it looks suitable for you. Now, these 4 indicators are all going to be cast on a scale of 0 to 2 to keep it simple for you guys out there. All you have to remember is above 1 is good and below 1 is bad. So the first indicator we look at is RV, or relative value, which is looking at the long-term potential of the stock over the next 1 to 3 years. With Veritex Pharmaceuticals, 1.46 RV tells us this stock has good long-term potential over the next 1 to 3 years. Second indicator, by far the most important indicator for what we're going to be talking about here today, RS, or that relative safety indicator. Now, RS is computed by looking at the balance sheets of the stock, analyzing all that fundamental data so you don't have to, and summarizes it into one easy to understand indicator. The best way to consider RS, though, is if a stock has an RS well above 1, that tells us the company is making money quarter over quarter, year over year, and they've been able to do that consistently for a long period of time. Now, stocks that are growing their earnings quarter over quarter, year over year, tend to continue to rise over that long time frame here. So when looking for those stocks that you can add to your core holdings, not the short-term trades like we talk about sometimes, but long-term holdings, these are going to be the stocks you're wanting to focus on here. Now, the third indicator is the RT, or relative timing, which is looking at the short-term price trend of the individual stock. And once again, above 1 indicates the short-term trend is up, and below 1 would indicate that the short-term trend is down. So at VRTX at 1.05 is in a slight uptrend currently. Given the overall market environment, that's not bad. We'll take it. So overall, the stock is favorable based off that VST rating, which is a combination of RV, RS, and RT all summarized into one. It's the only indicator out there that can help you really get a good overall picture of the stock from both a fundamental and a technical basis, all summarized into one here. So that's what makes us unique, and that's part of the reason why VectorVest has been around for over 35 years now at this point. So now, if we take a look at the stock, let's go ahead and change our graph layout here. So we'll go to the graph settings at the bottom and go to the lower indicator and change it from RT to earnings per share. Because if you're looking for safety, if you want stocks that you can get into, add to your portfolio, and help you sleep better at night, you need to keep an eye on the earnings per share, because if earnings are steadily rising, price will continue to rise as well. Now, granted, the overall market conditions haven't been great, but look at this stock doing the exact opposite of what the market has been doing over the course of the last 12 months. If we maximize it here, there we go. We can see a nice steady rise from bottom left to upper right, and also looking at the earnings per share, also a nice steady rise from bottom left to upper right, like a stair-step pattern. Now, when looking at VectorVest earnings per share, you'll notice that the numbers that you see here are going to be a little bit different than if you just pulled up their most recent earnings report. That's because we're not just taking into account the current earnings that they just released, but we're also looking at a forecasted earnings per share as well, based 12 months out. So it gives you a little bit of blend of not only is this company making money right now, but are they expected to continue to make money at least 12 months down the road? So it helps you get a glimpse into the future, so that way you can find the right stocks for you. Now, everything looks pretty good right here. Even with the current conditions of the market, VRTX has been able to buck the overall trend and have that nice, consistent, steady upward trend, even with the overall sell-offs that we've experienced. Now, if we get out of here, let's go take a look at the next one. Oh, come on. There we go. UNH, United Health Group. Looking at the analysis first and foremost. Good long-term potential, less risk associated with this stock, nice, strong short-term uptrend. Overall, the stock is favorable. We take a look at the chart. A little bit more volatility than what we experienced with VRTX, but the same type of situation. Nice steady move from bottom left to upper right. Also, earnings per share, nice steady move from bottom left to upper right. Everything that you want to find for a stock that you can add to your portfolio and not have to worry, is this stock going to be gapping up or gapping down 10, 20% at any given time. These stocks have consistent fundamentals, and that's what allows you to have that peace of mind knowing that, your stocks are safe and you can sleep better at night here. Getting out and taking a look at the next one. TPL. Good long-term potential, less risk associated with the stock, nice steady uptrend. Overall, the stock is favorable. Now, it does have a higher price target or price point at $2,400 a share. So, if you're not comfortable paying that, by all means, move on to the next one. But, if you're somebody who's okay with buying Amazon when it was trading at $2,000 to $3,000 a share, or even Tesla or any of those stocks that were trading, or Google that were trading at $2,000 to $3,000 a share, this one shouldn't really shock you too much, especially if it's going to be a core holding. Price shouldn't really matter too much as long as you're evenly dollar weighting your portfolio. CI for Cigna. This one, a little bit less long-term potential than what we've seen so far, but once again, less risk associated with it. Now, we always talk about identifying stocks based off your investment style, and we've talked about, really we tend to highlight the aggressive or speculative trades when we look at those, when we analyze your guys' stocks out there. When you see a stock that has a lower RV rating and a RS rating above 1, that would indicate more of a conservative stock. So therefore, a good long-term holding. It's not going to have the best long-term, trying to outperform the market, but then again, it has less risk. So it's a smooth, slow, and steady style of stock. If that's your cup of tea, these are the stocks for you then. Looking at it though, good long-term potential, less risk associated with it, really strong short-term uptrend. So overall, the stock is definitely favorable here. AZPN, another one. Great long-term potential with this one, less risk associated with it. You're in a slight short-term uptrend currently, so overall, the stock is definitely favorable. Now, I hope you guys are paying attention to the graph, the quick little graph at the top. We know based off the RS rating being above 1 that these stocks have smooth, consistent rising earnings, but you're also noticing that price action moving along with that, moving from bottom left to upper right. That's the type of pattern you should be favoring when considering adding stocks into your portfolio here. But looking at this one, decent long-term potential, less risk associated with it, which is the main thing that we're going to be focusing on here today. You are in a short-term uptrend, even with the slight pullback as of right now. Overall, the stock is definitely favorable here. And you can see we can do this all day long with these. Good long-term potential, less risk, nice steady uptrend. Overall, stocks are favorable. MUSA, same situation. So as you can see going through them, you're going to notice a lot of big names here. Murphy's, we just looked at that. AutoZone, we've talked about that quite a lot here on the channel. Humana, which is a strong, consistent, fundamentally sound stock year in and year out. LNG, which has been one of the top VST stocks for quite a while as well. CLFD, Super Micros showing up in the list as well. So you're getting a lot of big names. Charles Schwab. Let's see, what else do we have in here that most everybody should be familiar with? O'Reilly, Lilly, LPLA. We've talked about that one quite a lot here. I think that was actually originally referred to from you guys. So I know you guys are familiar with that one. ACGL. This is one we have in our Trading for Charity portfolio. And right now, still staying above that line in the sand. If we go take a look at the chart, pulling it up, this was a green line breakout. We saw a nice breakout here, reaching that new high. If we go zoom in, once again, we put our line at that low. Let's go maximize this here. That low for the day was 55.11. Here, broke down below for a brief moment, but closed back above that point. Here, still hasn't broken down below that point. So, therefore, this stock's still staying in that portfolio. Looking at the earnings over the last 12 months, nice steady rise in price, nice steady rise in earnings. This is exactly what you want to see when you're looking for stocks, once again, that you can jump on board with, even with uncertain times ahead, and still be able to sleep easily at night and not stay up all night worrying about what's going to happen next with your positions. All right, so if we get out of here, that's going to really be the main thing. You know, today we wanted to keep it short, sweet, and simple. That's really been our focus here with these sessions, you know, is breaking it into small pieces at a time to make it easy for you guys out there to follow along with and keep up to date with. And not try to overload you guys with information. So if you guys have any questions on this one, let me know. As always, though, if it is a screener, you can take a look at this screen parameters here. There we go. So your sort, once again, RS descending, looking for the highest RS stocks right to the top of the list. So that way it helps save you guys time out there. And then the screen criteria, recommendation equal or is a buy. So pretty simple search criteria, but gives you a lot of power right at your fingertips, easy to find. Once again, it's right at the very top of the featured screens. As long as you have the VectorVest Stock Advisory app premium version, you get all of this included with it. Now, as I mentioned a second ago, ACGL is in that trading for charity portfolio. Once again, we are in the middle right now, just on week 2, our second session of week 2, our second stream of week 2 coming out tomorrow at noon Eastern, right here on the VectorVest YouTube channel, where we're doing some live trading, teaching you guys how to use, how to get more familiar with charts, how to become better traders, learn certain patterns, you know, really helping you guys develop your trading skills. So if you want to learn how to become a better trader, better investor, come hang out with us at noon Eastern on the YouTube channel for our Trading for Charity event every Tuesday and Friday at noon. Also, at the same time, we're raising money for Levine Children's Hospital. Try to help make this holiday season brighter for the kids that are really having a hard time this time of year. So, you know, spread the word. Make sure to come hang out. The portfolio's up nicely in the green, up about 2% so far since we started a week ago. So I like seeing that. And if you want to follow up to date or want to stay up to date, if you do come to the Trading for Charity event and you want to stay up to date on any trades that I do outside of the live stream, you can follow me on Twitter at the very top of the screen. I put that up there, so anybody wants to follow me, you can follow me on Twitter. I tweet out anytime I make any changes. For example, I tweeted out this morning. I changed the stops on those. So if you want to go check that out, you can. All right, so with that, if you guys have any questions regarding this, feel free to let me know. If not, let's go ahead and start taking the viewer requests coming in. Let me know what stocks you guys want to see analyzed here, and we'll get those taken care of for you. Also, one last thing I want to do, premium watch list. Scrolling down a little bit, I'm just taking a quick look to check something. So with the premium watch list as well, you also have safest stocks with buy ratings at the bottom. Same list we just looked at, but here gives you that power of the rank analysis where you can use the rank by, RS, you could change any of these indicators. So that way, if you wanted to filter them a little bit better for yourself, or find ones that meet more specific goals that you have set for yourself, you can do so right here. GM, good morning. Good morning, Maria. Hopefully you're doing well. If in Choppy River, Fisherman Gain, why will... I'm skipping that one, Lou. Too much thinking right now for that one. All right, I see Robert coming in with Tesla TSLA. Sing at the very top of the screen. Go take your eyes off me. Look straight up. You can find my Twitter handle right there. So looking at Tesla. Tesla has great long-term potential. It does have less risk than the average stock out there. But right now is not the time to be holding it. With an RT of 0.56, with an RT of 0.56, that tells us this stock is in a strong decline. So even though the fundamentals are good, right now, the stock price is still heading lower. So once you own a stock, this brings us to an important lesson for the day. Once you own a stock, the most important indicator that you need to be aware of is the RT or relative timing. Because at that point, once you own it, the fundamentals don't change drastically enough to really make you want to change your position at all. The most important thing to you once you actually own a stock is whether or not that stock is making you money or losing you money. If the RT is below that level of 1, no matter how good the stock is still losing you money. And always remember, even the best stocks out there can have down times or down periods. That's what creates great buying opportunities once they start turning around. So for right now, even though the fundamentals are strong with Tesla, the timing is off. So therefore, we should be staying away from it. Overall, it's a good stock, just not the right time to be having it in your portfolio. Therefore, it has a sell rating. And, if you're wanting to get back in, or if you're wanting to add Tesla to your portfolio, simply be patient and wait for the RT to start heading higher, preferably getting above 1, realistically above 1.1 or higher. Sure, Sue, we can definitely do that. But yeah, so that's what we see with Tesla. Also, one other thing to consider. Tesla's current value is still at 115.91. So let's just round that off to 116. Right now it's trading at 218. It's still over $100 overvalued currently compared to what it should be worth right now. So even if you did get into Tesla, even as it's moving lower, you're still overpaying for that stock currently. And nobody wants to overpay for something that's instantly losing money right now. All right. Let's see. GTLS. Poor long-term potential, a little bit more risk than the average stock out there. So that does tell us this is still considered a speculative stock right now. However, it is in a really strong short-term uptrend. So overall, that momentum is offsetting the amount of risk in the poor fundamentals. So it makes the stock favorable currently. If you're not a speculative trader, if you're not a momentum trader, this is going to be one you probably stay away from. But if you're somebody who follows the charts, likes to get in for short-term trades, this could be one you could make some serious money off of. All right, let's go see the next one, MOS. There we go. MOS, good long-term potential, but a lot of risk associated with it. It's in a steady decline. Overall, the stock's a little bit above average, but the timing is not right. So therefore, we should be staying away from it currently. DVN. I see a lot of oil stocks coming in here today. DVN, great long-term potential, about average risk associated with this stock. You are still in a strong short-term uptrend, even after the pullback the last couple of days. Overall, the stock is still favorable. OXY, great long-term potential, less risk associated with the stock, nice strong uptrend. Overall, stock is favorable. IIPR, good long-term potential, but does have a little bit more risk associated with it. No surprise knowing the industry it comes from. It is in a short-term uptrend, so overall the stock is favorable. Now, as we've been talking about different investment styles, if the RV is greater than 1, RS is below 1, that indicates an aggressive stock. If you're not an aggressive trader, you're probably going to be staying away from this one. QCOM, great long-term potential, a little bit more risk associated with it compared to the average stock out there, however. And then looking at the timing, 0.51, telling us it's in a really strong short-term decline. Therefore, the stock is about average overall, but right now is not the time to be holding it in your portfolio. If we look at the chart real fast, you can see over the course of the last year, it's been steadily moving lower. Now, what I was mentioning earlier about, stocks, even the best stocks can go down in a down market. This is one of them. The stock is making money over a long-term period. Yeah, this stock will most likely outperform over a long-term or a long time frame here. But with the current conditions, this is one that has not been able to buck the overall trend over the last 12 months and has been following right along with the overall market. Let's look at CCRN. Sure. CCRN. This stock, great long-term potential, less risk associated with it. Really strong short-term uptrend. It's up over 10% here today alone. Overall, the stock still remains favorable. LNG, sure. LNG, great long-term potential, less risk associated with this stock. Really strong short-term uptrend. Overall, the stock is favorable. Now, one of the things I will point out here, when looking at the chart, getting it pulled up. Come on. Come on, Wi-Fi. There we go. So this stock, on a short-term basis, you have been, while you're still moving higher, you have been seeing more volatility. And we talk about the 4 tips to know when to sell. One of those rules of thumb is whenever you start to notice more volatility coming into the stock relative to what it's been trading like the last most recent period, that's usually a sign that a trend change could be coming in the near future. Well, we started noticing more volatility as of late. So this stock has been a top VST stock for at least a couple of months now. If you have good gains on it, make sure that you're tightening your stops, moving your stops up as the stock gives you more profit. So that way, if it does have that pullback, then you lock your profit in. And if I'm wrong, then so be it. The stock continues to go up and you just continue to move your line to stand up higher. So just keep that in mind when looking at the chart here. All right. MRO just beat earnings. Let's go take a look. All oil stocks have been beating earnings lately. So this one, more of an aggressive play. Great long-term potential, but does have a little bit more risk associated with it. Really strong short-term uptrend. So overall, the stock is still favorable here. Tyree, hopefully you're doing well. Glad to see you here this morning or afternoon, depending on where you're tuning in from. ENVX. There we go. ENVX. Poor long-term potential, a lot of risk associated with it. You're in a steady free fall. Overall, the stock is not favorable. Taking a look at the chart. Had this one little bump up here, but then is now back down to where we were 6 months ago even. No earnings per share data on it. Looking at a 1 year. Let's go ahead, change that lower indicator to RT. We can see RT has been below 1 most of the year. Now, you did have that little bump up there, but it wasn't long-lived. You had a triple top 1, 2, and 3. Triple top here, wasn't able to break through that level of resistance. So therefore, that would have been your indicator to start tightening up indication to start tightening up your stops. Now at this stage, with RT so low, I'd still be staying away from it. Notice, before the gap down, even here today or yesterday, RT had been below 1 for a week or two prior to that even. So giving you some early indications on, something may be going awry and this stock really is struggling to continue that rally that we saw earlier throughout the summer months. SWAV. So Shockwave Medical, I believe it is. Looking at it here, good long-term potential, a little bit more risk than the average stock out there. However, you're basically flat on a short-term basis. Overall, though, the stock's a little bit above average. GERN. Poor long-term potential, a lot of risk associated with it. You're in a really strong short-term decline, so overall, the stock is not favorable. It's a speculative trade, therefore, it can go up and down very, very quickly. Don't want to be on the wrong side of this one. TRGP. TRGP, great long-term potential, but a little bit more risk to get to that potential. You're in a strong short-term uptrend, so overall the stock is still favorable here. WPC. WPC, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable. VBNK. Not seeing VBNK, Peter. CVE. CVE, great long-term potential, but does have a little bit more risk than the average stock out there. You're in a really strong short-term uptrend, so overall, yeah, the stock's favorable here. Everything's going good. Thank you for that. Let's see, CMG. Also, if you guys are hanging out watching this and you guys are enjoying yourselves, make sure to hit that like button. That shows support for the channel, doesn't cost you a thing, and helps keep us going here, keep us motivated, keeps us growing, keeps our community, the VB Nation community, growing. So if you haven't already and you're still here right now, that tells me you're sticking around for a reason, you're enjoying yourself. So make sure if you haven't hit that like button, do so right below me right now. All right, CMG. Good long-term potential, but a little bit more risk to get to that potential. You're in a steady decline, so overall the stock is not favorable. Crazy to me to think CMG, a stock trading at $1,400, is considered aggressive, but hey, got to go off the data. We need better screeners. Well, Jamie, I mean, a lot of the screeners, I manage those and I've changed them over the years, but a lot of that comes from your guys' input. So, if you guys have screener ideas that you want to see, let me know. A lot of those have come from your guys' suggestions. So that's the great thing about these mobile streams is that, I get to interact with you guys one-on-one directly. And a lot of your guys' feedback, if you've noticed over the years, goes directly into what we do when, putting out new stuff inside the Stock Advisory app. All right, let's see, DEN. DEN, good long-term potential, but does have more risk associated with it. You are in a strong short-term uptrend, so overall the stock is favorable. Desktop screeners better than mobile screeners? That's correct. And the mobile app is a companion app for the desktop. It can be used as a standalone, but yeah, it's not going to be as powerful as the VectorVest 7, the desktop program, simple as that. Due to limited capabilities, limited functionality from, a computer that can have 32 gigs of RAM and i9 core processors and all this other stuff upgraded to it compared to, an iPad or a tablet of some sort. So yeah, a lot of that is due to that. But yeah, it's not designed to be, a full functioning VectorVest 7. It's designed to be a companion for the VectorVest 7 platform. Let's see, getting back into it. AEHR. AEHR, good long-term potential, but does have a little bit more risk associated with it. You are in a steady decline now on a short-term basis. So overall, the stock's a good stock, but the timing is just not right. BJ's, poor long-term potential, a lot of risk associated with it. You are in a slight uptrend on a short-term basis, so overall the stock is favorable. Now, looks like Costco's had its fun with BJ's, taking away some of that share or that basis there. So therefore, that's hurting BJ's and makes it now a speculative play. So be careful with this one. Let's see, CPG. CPG, great long-term potential, but does have more risk associated with it than the average stock out there. You are in a really strong short-term uptrend, so overall the stock is favorable. Apple. About average long-term potential, but you do have less risk associated with it. However, you are in a strong, steady decline, so overall the stock is not favorable right now. DRV. We'll do a couple of more here, then we'll start winding it down for the day. So DRV being an ETF, your primary focus is going to be the RT or relative timing, because ETFs don't report quarterly earnings. They don't have balance sheets like an individual company would have. So therefore, the fundamental indicators such as the RV and RS are always going to be pegged at 1. Therefore, whenever analyzing an ETF, focus on RT. At 1.72, that tells us this ETF is in a strong short-term uptrend. Therefore, overall, it's favorable right now. All right, we'll do 3 more here. So we'll do VGRO. Oh, VGRO, not able to find it there. So going to have to skip on that one. INTU. INTU, good long-term potential, less risk associated with it. However, you are in a strong, steady decline. Overall, the stock is not favorable. CVM, poor long-term potential, a lot of risk associated with it, in a steady decline. Overall, the stock is not favorable here. Already did DVN. We got one more to do. Let's see, what was it? HLK. Not seeing that one, so we'll do one more VLO. Great long-term potential, less risk associated with it, really strong short-term uptrend. So overall, the stock is definitely favorable. Now, if I didn't get to analyze your stock, I do apologize. As always, if you're a VectorVest subscriber, just simply pull up the VectorVest Stock Advisory app from wherever you're at, tap on that little magnifying glass in the upper right-hand corner, type in your symbol, and you can do the same analysis on your own wherever you're at on the go. If you're not already a subscriber, click on the link down in the description of today's video. Sign up for the 2-week free trial, put it to the test. As the old saying goes, seeing is believing. Now, going and taking a look at the homepage. Looking at the Dow. Dow's been improving a little bit, now down only 0.3%. The NASDAQ pulling back a little bit, now down over a full percentage point here. S&P 500 still remaining flat, down about 0.7%. VectorVest Composite also about flat, down about 0.2%. Therefore, we're now 2 ticks into the red instead of 1 tick into the red. And if we scroll down, we can see that second red light is coming from that buy to sell ratio, indicating that the buy to sell ratio is now moving lower day over day and week over week. Another way of looking at it, less and less stocks are participating in the overall market. So on that, be careful. Now, once again, as a reminder, if you're still here and you haven't hit that like button already, go ahead and do so now. Once again, doesn't cost you a thing, keeps us going, and continues to grow the community that is the VV Nation community. So to keep growing the community, make sure, as always, smash that like button. Also, tomorrow at noon Eastern, I do have our day 2 of week 2 for our Trading for Charity streams, where once again, we're raising money for Levine Children's Hospital. So if you want to come and donate, to help make this holiday season a brighter holiday season for kids that are really having a tough time right now, make sure to come hang out with us and catch some live trading as well. Once again, that's noon Eastern right here on the VectorVest YouTube channel. So on that, thank you all for hanging out with me today. It's been my pleasure being with you guys. Be safe out there. If I don't see you tomorrow, have a great weekend. Be safe over the weekend. And make sure to be back next week as we kick off another stream, teaching you guys how to use, once again, the most comprehensive trading app available to you. So until then, it's been my pleasure. Have a great rest of your trading day. Take care, be safe, and toodles.